What's up, guys? Good morning. Happy Monday. How are you guys doing? Let me know in the chat how you guys are doing and where you're tuning in from. Get into the analysis for the day, for the week. It should be an interesting week. We'll say that, right? What's up? What's up? Yeah, so I'm filling in for Marco today. If you guys aren't aware, I think Marco is normally on Mondays. Yeah. And so we're switching it up this week. I'm going to be on today. Marco will be on Friday. If you guys aren't aware, make sure you're following Chart Fanatics live in the Discord channel for the updates and on Instagram for updates for our schedule. Tuned in from Pakistan, from Germany, from St. Louis. Welcome in. Welcome in. You're not going short? Yeah, I'm going to be very, very patient today. I'm just going to let you guys know, right? So we had the ceasefire agreement fallout with Iran. That appears to be a full fallout now. Like I was kind of warning of on Friday. I think if you guys were in the live trading session that I did on Friday, I basically said that I'm very cautious, just the overall market heaviness and the fact that it looked like the overall ceasefire agreement was on thin ice. But we'll talk about that more in a few minutes. What's up, Victor? Hello, welcome in from Kansas City, Mr. Moo something. Marine Blue, what's up? Welcome in. Aaron is what's up? All right. So if you guys haven't already, make sure you smash the like button as we get going here. Helps us out a ton if you guys appreciate all the free value, free giveaways that we do in this channel, free analysis, right, from all the great traders here on the channel. And helps us out a ton if you get value out of it. If you do get value out of it, then make sure you smash the like and subscribe for more. If not, have a great day. Thanks for tuning in. Good morning, Trader John. Good morning. So I was going to start out today. We'll get into the charts. This morning's going to be a very patient morning for me. We'll go through analysis together, the exact scenarios and things that I'm watching out for, all that kind of stuff. But I was going to start out this morning and tell you guys a bit of a story. Let me know in the chat if you guys are okay with that. Good morning, Nicole. Welcome in. Elite trader, lack of participation. This is a trap. Yeah, feels that way. Grateful for life. That's amazing. Mr. End said, yeah, go ahead. I'm good with that. I'll take one. Yeah, so I was going to start out today with a bit of a story for you guys. And it'll connect, I think, the reason why as we go into this Monday morning. Right. So when I was growing up, I came from a hardworking but pretty poor family, right? Not poor as in, we had the essentials, right? We had food, we had shelter, things like that. But in the grand scheme of things around the world, right, that's pretty good in America, right? So I'm not complaining, but we definitely didn't have excess, right, for sure. And we didn't have leverage, right? That's an important word. We didn't have leverage. And in fact, leverage worked against us quite a lot, right? After the economy tightened in 08 and stuff, we lost our house and all that kind of stuff, right? Leverage is something that can work really hard for you, or it can work really against you, right? And when you're in a place in life, if you're in a hole, you have debt, family obligations, you have bills, you have basic necessities, you have all that stuff, you have lower leverage, right? And I'm not gonna lie to you, just straight up, you have lower leverage, and you're kind of trapped like my family was, right? It's not that you have a lack of hard work or anything, but you're trapped kind of in a cycle where you're working very hard just to keep your head above the water, and you don't have much excess in terms of time and capital to give yourself more leverage to get into a better situation, right? Uh, and that's extremely difficult to get out of. It's not impossible, but it's just very difficult because you have to work so hard to meet your current needs, and you have to work so hard to meet your current needs, and you have to work even harder after that to build some kind of skill or capital to get yourself ahead beyond that. And it's not just capital in terms of trading capital. That's not what I mean. There's different types of leverage and capital, right? So it's not just leverage in terms of trading like we traditionally think, right? I'm talking about at the most basic level, leverage means really like what you put in to something versus what you get out of it, right? And the higher skill you have at something, the more leverage you have, right? Because you don't have to put in so much to get so much out of it, right? That works in a few different ways. I'll talk about it. So skill is leverage. And another piece of leverage is money, right? If you have a lot of money, you don't need to do so much because you can do a volume of, the money can do a volume of work for you, right? So you don't have to put so much time and effort into something, because you can either put a lot of time and effort into something as a large volume of work, or you can just have a large volume of money do a large volume of work for you, right? And so you can get a lot out of that if you already have money. But when you don't have that high skill leverage and you don't have money as leverage, you don't have much. And what I first started becoming aware of this kind of concept of leverage, right? When I was a kid working, when I was in high school, I worked full time. I did school at night and I worked in construction. And I started doing things like identifying inefficiencies or imbalances in the market, right? I flipped iPhones, gaming consoles, cars even. And I started realizing that if I found little imbalances in the market, I could make a lot more than my hourly wage in construction a lot faster, weeks or months worth of pay in a single transaction that didn't really cost me any time. And so I'll fast forward a little bit. When I started thinking about what kind of career that I wanted to have, I was thinking about the same concept of imbalance. Like, what was there a great supply and demand imbalance for? What could I get a lot out of, right, for the same amount of effort? And I started identifying tech. One, because I had a family mentor that was in tech, and that was really like my only exposure to like, wow, they can make a lot of money in tech, right? Why work so hard at some other field when I can put the same amount of work into learning this thing and have way more leverage, get way more out of it, right? But I couldn't afford college, so I went in the military and to kind of earn a way to pay for education partially. And I like my country, so it was a double win. But while I was doing that, I knew I wanted to be in tech, so I went into that. But I was constantly thinking, researching, okay, even within that, what is the highest like leverage thing that I can learn where there's a supply and demand imbalance in the market, right? Where is there the greatest imbalance as far as the specific skills that I can learn that takes me the same amount of time to learn, but if I learn these specific skills, it pays way more, right? So I was constantly researching within tech, right? What I ended up making a career in, right? And that did really well, right? Because I identified through a lot of time, effort, and research, right? I went to college and got a computer science degree, and for free from the military, right? So I put a lot of effort in up front for very little, and then I started gaining leverage, right? So then I learned some skills, right? And so that gave me a little bit more leverage, right? And then I got very specific skills and very specific things that gave me even more leverage, right? But then fast forward a while, like I said, since I was a kid, I was always interested in essentially trading cars, trading stocks, trading anything, because anything that I could identify as an imbalance in the market that could give me leverage, right? Because it didn't cost me time. I didn't have to trade time. Like there's a couple ways, right? I can trade time with a high skill. That is leverage, but even greater leverage than that is something that I can identify an imbalance in the market, where I can get a huge amount of leverage that doesn't require time. At least the transaction doesn't really require time. So I was trading along the way, and I got to a point where I realized, I could make hundreds of thousands trading faster than I could do that with my high leverage skill in tech. That took years. But that takes time. And if you get into trading essentially gives you leverage at all levels, right? Whether you're trading futures, options, prop firms, or personal capital, whatever you're doing in trading, you are essentially trying to get leverage, right? Let me know in the chat, right? You're trying to get more for less, right? You're trying to get more out of your time, your money, and your effort than what you put in. You're trying to get leverage. And if you try to do that too fast, you are putting yourself in the position where leverage is not your friend. Leverage is working against you. And you are going to put yourself more and more in a place of, debt, psychological failure, emotional trauma, and it gets harder and harder to get out of that. Not just in terms of physical capital. We can all look at a spreadsheet and understand how physical capital works against you when you're using leverage, the deeper you dig into a hole. But also the same thing is true psychologically, emotionally. And you can get out of it, but the deeper you get into it, the harder it gets to get out of it. Just like, if you're in a place in life where you're working really hard at something, but it's not a high skill, high leverage anyway thing that pays you a lot, and you're stuck in a place where you're working really hard trying to get out of it, but you don't have much time or money after meeting your basic needs to get further ahead, right? And I'm not going to lie to you, it's not easy, and there's no real easy way. But identifying where you're at and not over leveraging yourself is the first step, right? Because think about it like this. Do you want to be in the position where you have, and everybody, some people in here might be in that position. I was, or my family was, right? And different things, right? Where you have a mortgage, you have bills, you have pretty much no time because you're working all the time, and you have all these, responsibilities and stuff, and you're working all the time just to keep up with that, right? So all those things are leverage working against you, and you don't have very much, time or money to build leverage in your favor, right? So early on in trading, taking on too much leverage is like unnecessarily stacking all those things against you. It's like going to college without any idea of what you wanting to do, getting a degree in basket weaving and having all this debt to start out with absolutely no skill or anything that was going to accelerate, your earning potential, right? So you're just digging yourself into a place of lower leverage for no reason, right? You're forcing leverage to work against you. So no matter where you are, like, identify if leverage is working for you or against you, right? And if you're early on in trading, I always say win slow, suck less, right? Don't try to win so fast where you're forcing leverage to work against you, right? Focus on building the skill set over time first without applying the pressures of leverage, right? And if you've already done that and you're already in that place, you've made it harder for yourself. I'm not going to lie to you. If you've dug yourself in a deep hole, psychologically, physical capital, in terms of all that, right? But you need to first identify that and accept it, right? And build the proper foundation first, right? If your trading career is like a skyscraper and you're trying to build it, this massive skyscraper, if you're trying to build that on leverage without building a proper foundation first, it's like going out and not building any foundation and trying to just build a skyscraper on the beach sand. Even if you go on a streak and build it up pretty high, pretty fast, it's 100% going to come toppling down the first time we get a sprinkle of rain, 100%, right? So the deeper you build the foundation first, the higher you can build the building overall. And the foundation is consistency, risk management, routines, trading system that you can develop a positive expectancy with, and then start building it higher, then start adding leverage, right? So when we come into a week on a Monday, right, let's be mindful of where we're at overall and make sure you're not trying to rush in with too much leverage, too much over trading, things like that right off the bat, starting the week, right? Identify this could be a potentially wild week, right? We have things going on geopolitically with US and Iran, and it's Monday, right? So the market is going to be kind of probably trying to price in some of the uncertainty and things that are going on, things that happened over the weekend, right? So bear all that in mind as we get going here on a Monday. Personally, for me, I'm going to stay probably cautiously observant and patient going into the week this week, right? Hopefully that helped you. Hopefully that provided you guys a little perspective no matter where you're at. All right, let's get into the charts. Quick shout out to our sponsors. We're going to have some giveaways today. We got code CF on Apex, right? So make sure you get that for 90% off right now. If you are in a place where you're building expectancy, right, you can gain leverage through those things. And if you're starting out and you don't need to, expend yourself in a deep hole, right, those are some ways to get leverage. But like I talked about earlier, be mindful of the leverage that you're using it. Make sure you're not using leverage against yourself for no reason. We have some giveaways today. We have Apex, we have Alpha Capital, and we have a 6-month trade Zella. So you can start working on building your foundation if you're not already. All right, so let's get into the charts and specifically what I'm watching out for today as we get into this here. Let me make sure this is up. Get my handy dandy screenshot snipping tool. All right, so I drew this volume profile here that we're seeing here on this whole range that we've been in, basically this sideways range around these 6,800s, 6,900s for the last few days since we had that large, blow up last week early. Excuse me, sorry, I need some coffee. Right, so we had that large rally last week down here, and then we went into this range where the market's kind of been up and down, right? So we've got a little bit of a double distribution of volume going on here in this range. Sorry, I messed this up. Here, where we had a gap down, but essentially 68.90 to 67.90, 100-point range here, where I'm kind of seeing the market as essentially balanced. Right, we had this big gap down from the top of this range down to the bottom of it on the open, and then we've retraced our way back up there. a bit. So I'm watching this gap area here that also aligns with kind of this middle area of this double distribution of volume, right? This large kind of low volume node, if you will. Not really low volume node in the sense that I look at them typically for trading, but lower volume area, this valley here, this volume valley here, let's call it that. That also aligns with this gap area from prior day here. Okay, so overall, the market, nothing significantly changed from Friday for me. I was already kind of cautious of this whole Iran ceasefire thing falling apart. It's not too surprising to me. So the main things that have changed from my perspective is just we gap down from the highs of this range to the lows of this range. And so if we pop back into here, into this gap area and fill it, right, I'm watching to see the main scenario that I'm watching out for is if we get exhaustion from buyers here, because I don't fundamentally, you know, and I could be wrong, I don't fundamentally see a whole lot of new reason, right, unless some news comes out and changes that, but I don't see a lot of new reason for buyers to have a lot of momentum. It seems like that was likely used up during all these rally attempts last week, the last few days last week. So not 100%, right? But the main scenario that I'm watching for here is if we gap fill up here or pop into this area, if we see signs of exhaustion from buyers, especially after the opening drive and initial balance starts forming. So potentially a top reversal if we get pop, kind of squeeze above the lower end of this double volume distribution here and fail. Now, if we fill this in and buyers maintain strength and we squeeze up, right, then that's a possibility. I just think it's a lower probability possibility, but it's possible, and I'll watch for it. It's going to be a matter of reading the order flow and reading the tape. If we break down the lows of this range with a lot of aggression and selling, I don't see much from stopping us from retracing a lot of this lower volume area where we rallied on late last week. So I'll drop this screenshot in the chat for anyone that wants to review that. In Chart Fanatics Discord under the Matt Owen channel, I'll share this there. And then here's another visual for you, looking at my 4-hour chart here on Tradeovate with a volume profile drawn on this range. So here we see that large consolidation area where we previously accumulated for a while and then rallied aggressively out of here on the news of the I think this, what was this? This was the initial announcement of the ceasefire agreement, right? Now we got up here, consolidated a lot, and then over the weekend, it seems as if potentially that ceasefire agreement has fallen apart. So we rallied all the way up here, kind of went sideways in a large 100-point range here, kind of formed this, what I talked about, this kind of double distribution range here with this peak and valley. And we have this area within that aligns with that gap area specifically right there. So again, just from this visual, the main things I'm watching for, especially in the first hour, if we fail to get above that and we see a lot of exhaustion from buyers, a lot of absorption, then I may look for that to be kind of a gap fill and reverse, especially if you see this whole area of lower volume. Now, buyers were really aggressive here, and that's been why it's defended as the lows of this balance range every time we've come into here, right? But if that breaks, right, then that could cause this cascading event where all this lower volume area where all these buyers have to stop out of their positions. And if this cascading thing happens where all these buyers, you know, we fail at this range here and all these buyers have to start stopping out, then we could retrace back down here to where this last large area of volume was built. Now to the upside, again, if we kind of fill this volume in here this morning and hold, right, then we may squeeze back up into the highs. We do have some news at 10 a.m. We have the new home, what is it, new home sales or just existing home sales news at 10 a.m. to watch out for. So 10 a.m. will be an important one to watch out for. I find it a little tricky if we do just keep squeezing higher to find a setup to trade long. If I do, I'll probably be quicker in out, scalp type thing. If we come all the way out here and take out these highs and then find exhaustion, then that's a potential kind of scenario, but I'd be more looking for just kind of a quick scalp mean reversion type setup on that. So those are a few scenarios that I'm watching out for here this morning. NQ overall is pretty similar. Not gonna lie to you. I'm mostly watching ES right now, but I'll quickly take a look at NQ to give you guys that visual. Overall, pretty similar. We have this large lower volume area here where there was really aggressive buying after the Trump-Iran ceasefire agreement was announced last week. And then since then, you can see how we went into this pretty large range. This double distribution is not as clearly defined here on NQ, and it's there, but it's kind of filled in. This is kind of filled in a lot more overnight here, it looks like. But it's still there a little bit. So we need to watch out for that. Maybe a little bit of relative strength here on NQ. NQ's going for the gap fill earlier. Right, so similarly, do we kind of fill this in, buyers get exhausted, and we drop? That's the scenario that I'm watching for. Do we fill this in and keep squeezing higher? Now, another scenario I didn't really talk about, but potentially if we just kind of fill this in and then we get no major reaction and we just kind of chop and grind here in this as we kind of like, the market is kind of like pumping the brakes, waiting for what happens next, then that's for me, a scenario I'll probably look to observe and stay cash. Make sense to you guys? Good morning, Samuel. Welcome in. Welcome in. If I have to use only one tool, which one? Probably a tool that gives me charts and volume profiles and some kind of order flow analysis. So I can do at least the basic technical analysis that I like with volume and real-time reading the order flow at a minimum, like large orders and like a delta footprint chart or something where I can get my precise entries. Bookmap is one of my, and I share this on screen, it's one of my favorite, like real time. Here's the market open at 9:30 here, we're squeezing up into this gap. Real time order flow tools, I've been using this for years, but it would likely be tough to this be my only tool because I don't have like charts and multi-day volume profiles and stuff, at least in a way that I use it. Yeah, let me know questions in the chat, guys. I'm always on here to give you guys some coaching and some Q&A throughout. We'll let this first few minutes develop here, especially here on this Monday. But we're kind of squeezing up into that range that I talked about here to kind of watch out for. So prior day lows right around 68.46-ish. Mark that specifically. Yeah, we got those prior day lows around 68.46.25 on ES, which is, yeah, and we closed a bit higher than that, so the gap is a little higher than that. Did you learn discipline by the military or by trading? Both. Definitely both. Any thoughts on NQ? Looks a little bit relatively stronger. I don't have my NQ chart up as well. I'm primarily focused on ES right now, but let me look. Yeah, it's already back above prior day lows here, so it's kind of going for this kind of gap fill, at least the gap to the prior day lows here quicker. So maybe a little bit slight relative strength, but overall mostly the same. But the game plan and everything that I talked about on ES, levels are obviously slightly different on NQ, but the overall game plan is pretty much the same. Welcome in, Tiger Trades. Yeah, I don't have somebody said wondering if the gap filling can be a strategy. It certainly could. I don't have like a specific like what's the word? Systematic, I guess, quantifiable gap fill strategy. That's not really in my playbooks, but I am watching for this kind of opening drive exhaustion into this gap area. We have this double distribution in lower volume area on the volume profile. If we rally up here, the market sentiment overall, to me, fundamentally seems a little heavy still. Seems a little heavy still. I think I saw a headline as well about the U.S. blockading the Strait of Hormuz at 10 a.m. today. I don't know if you guys can confirm that in the chat. So that kind of coincides with the existing home sales news there. So we may see a reaction there if that actually goes into an effect, or if there's a last minute announcement, pause, just kidding, ceasefire back on, the old Trump market surprise. But if that does not, we don't get any surprise adjustments to that last minute, and that goes into effect at 10 a.m., then that's something else to watch out for at 10 a.m. What visual patterns and volume bubbles versus a current order book that provides the strongest clues that a hidden large order is being executed? There's a few things, but like if I see, first large absorption at an area where there's like a large positive delta, but price fails to move beyond that, and then I see, multiple subsequent attempts to rally or drop into that area, and either we'll see on the heat map like passive offers repeatedly popping up there as soon as price rallies up into there, or sometimes they do a good job of hiding it when they're kind of working an order at a specific place, and you'll just see, for whatever reason, the orders keep popping into there and just cannot get beyond that specific area, kind of like an iceberg type thing occurring. Then that's something that I watch out for. When you were at the crossroads of finding a strategy that suits you and putting your psychology in order, did you do it all on your own, or did you consult with someone? As far as finding what works for me and my psychology and stuff like that, I didn't really consult with anyone. That was just on my own. There's a book that I really like called The Daily Trading Coach by Brett Steenbarger. And that was probably my favorite overall. Read it multiple times while I was working through things, figuring out what works for me, and working through things. Yeah, the Daily Trading Coach by Brett Steenbarger. Is that right? Am I pronouncing his name right? I might have messed that up. Sorry, Brett. How does order flow interact with Fibonacci retracements or market structure to spot the exact candle for entry? I don't look at different Fibonacci retracements so much. I do look at Fibonacci's, especially on like ranges for the 50 percentile. For context overall, that's pretty much the only thing I look at. The market has a knack for retracing 50%, whether it's 50% on a bounce range, 50% on a large imbalance move. I don't know. There's something about 50% that the market auction likes to find. But so that's the main thing that I look at, and I usually I don't typically just use that all by itself. It's just an added confluence to me that aligns with maybe like point of control or low volume node or something, something that truly shows me from the market auction other than just drawing a 50%. If multiple things stack up on a specific area, that's something to pay attention to. Right. And the market often reacts to all kinds of levels, right? Because what is the market really reacting to? It reacts to where people react, because people place orders, right? Or algorithms place orders, right? So if people are, for lots of different strategies and lots of different reasons, are all looking at a similar area, it's likely something's going to happen there, right? Either a fake out squeeze type thing in reverse or something, right? If there's a lot of people and money at a specific area, then the market's probably going to react to it. So it's something that I'll pay attention to what the order flow is telling me. I'm not necessarily going to trade it in the same way retail trading strategies look to trade it, but maybe it's something that I see that the market is going to draw towards, and I'll use it as a target, or I'll just read the order flow off it if it aligns with one of my trading setups and it's just a key level that I need to pay attention to, especially when multiple things align with it, like 50% Fibonacci, a low volume node, point of control in a balance range, or some things like that. How to be disciplined. It just has to be a choice. You just have to be so sick of, and it's not like you are disciplined or you're not, right? Everybody has some degree of discipline, right? It's a skill, like a muscle that you can build. It helps to build discipline in other areas of life outside of trading. But I think Tony Robbins says this: change happens when the pain of staying the same becomes greater than the pain it takes to make the change. That's true. Yeah, it helps. It helps if you're super undisciplined in other areas of life. It's going to be hard to be disciplined in trading. So, start building that in multiple areas of your life, and it will transpose itself into trading as well. Kind of hanging around in this gap fill area. So I'm going to be definitely chilling. We're kind of in no man's land, kind of hanging around here, guys. So I'll show you my candle chart. I don't have much. So we had this area, right, where this volume distribution occurred up here, and then we have this area down here where this volume distribution occurred down here, and in the middle was that lower volume area that we're kind of grinding our way into here, filling in, right? Actually, just for shits and giggles, let's draw a fib on this gap range. So we're back above the 50%. Since somebody was asking about fibs. So here's that 50%. I just drew it from close to where we gapped down to, right? 50%. And actually look how the market consolidated around this 50% spot for quite a while overnight. And we broke out above it here, but that's not too significant to me. So I'm kind of, only thing I really have to mark is prior day lows here and where we gap down from up here. Friday's close. I don't really have much to mark other than that. So who's excited for this trading week, right? Could be some good volatility this week if there's some updates. What's been difficult though has been the market has spent a lot of time like grinding and choppy until some kind of headline comes out, and then the market just accelerates to price that in so quick. And it's hard if you're not already kind of just positioned for it at the right place at the right time. It's been hard to capitalize on that, at least for me personally. So it's been like chop, grind, explode. That's a little difficult. So just staying very, very patient for things to align. Focus on risk management first. Focus on sucking less first in the short term. Don't do dumb things in the short term first. Right? So if you can just do that, you'll survive long enough to be around for the good banger trades when they happen. On Friday, we caught a nice 4R mean reversion. We came back to my entry area and reversed lower from that. Let me know in the chat if you guys were in my stream here on Chart Fanatics on Friday and you were here for that trade. Got a nice 4R mean reversion. But that's an awesome part about order flow is you don't need to catch massive daily range type moves to capitalize on high probability, high risk versus reward. SMB said banger. Gusta, yes, he was there. Slayer, yes, you're there. Victor, yes. Raymond, yes. Yeah, so a lot of people were there for that nice 4R banger on Friday. But again, that's the power of just staying patient, identifying things when it's a good probability, when it's a good, the odds are in your favor. It's an asymmetric bet. Risk versus reward is in your favor. Boom. What is a maximum winning trade points on ES? I don't know. I would say probably 90% in current conditions, 90% of my winning trades have been between 8 to 20 points. And I would say that's the majority of the time, at least in current volatility. There have been times where I catch bigger moves and I trail my risk. It aligns with the trending move. And, I've caught hundreds of points on some swing trades, multi-day, just a couple days swing trades. So it just depends on the trend. It depends on that. Lately, in these conditions, I've been much more just in and out. I haven't taken really any bigger swings. I haven't, it seems like the trends and reverses on a daily basis. We did have a string of winning days after we traded down to some key technical areas last week. Quite a move. So unfortunately, I did not capitalize on this one with a swing trade. This is normally a setup that I would like to capitalize on a swing trade. But we had this key area here that I have highlighted in blue. This area had been marked on my charts for some time, just under 6,400. We had some major prior lows there. It also aligned with the bottom of this channel that we had been in for multiple weeks. So we hit that. And since then, we had a really nice, multi-day move. But even within that, we did go through a period here when we came to the top of this channel. Look at that retracement there. So we did chop around this, we ended up closing green every day. We can see on this daily chart here on ES.
but we did chop around just looking at the wicks for a few days here at the top of this channel, and then the explosion out of it. But both of these larger moves, yeah, they occurred at technical areas, but they also happened in a time and a way off news that was difficult for me to capture, at least with my trading. Right, this started like before the market even opened. I think last week, was it last week or the week before, when the ceasefire agreement was announced, and we exploded off there. What up, Riz? Riz is in the chat. What up, man? Riz has been on a brutal recording schedule, traveling. Like, the output of that dude is insane. I don't even know how he does it. Welcome in. Yeah, so we got a big week ahead, right? But kind of going back to the daily chart here, just to kind of take a step back to where we're at overall here. So this has been a key resistance area. Remember, if you guys remember, if you were here Friday, I was basically talking about how, you know, I was cautiously watching this because we were approaching this area. Let me clean this up and talk about this again a little bit. So for those of you that weren't in here on Friday when we went through analysis together, I was basically watching this area because, one, this is where I originated this downtrending channel that we were in. We were in a multi-month consolidation area here, and these were kind of the lows of this multi-month consolidation. If you look at the lows of all these wicks here, that one specifically, because it kind of started that downtrending channel. But if we look at kind of the bottoms of all these candles and the wicks, you can see this area was just a key area that we kind of pivoted around all these prior lows, and we consolidated for a couple, even if I go back, you know, to these lows here, right? There was like multiple months we were in this range. Whoa, hang on. Tape just sped up. So this was just a key area of consolidation lows for several months that we finally broke down with this channel, right? So that's why this range that I talked about on Friday was kind of a key resistance area. Did something get announced? Let me check out my news, because this is large. Did we get a rug pull on the US Strait of Hormuz blockade? That's what it feels like here. I don't see anything. Just a massive squeeze a couple minutes before the news here. So that's interesting. Insider trading. Iran looking to end uranium enrichment. Somebody said, let me check. I don't have anything on my news yet. Check out X. So maybe Iran is, yeah, Iranian officials are studying abandoning uranium enrichment as U.S. condition for ending the war. So maybe Iran will finally fold and commit to ending nuclear programs and uranium enrichment. That would be positive. That would change. That would fundamentally, if that did happen, that would fundamentally change a lot of the short scenario that I talked about today. But again, not changing course here just yet. some bigger sell order hit up here around like, where's this? 53 up here. Bigger sell order hit up there. Some big offers stacked up here on 68.55s. So we came into those prior day lows and that gap fill. Hard to short against that though, when the market just explodes like that. Somebody asked, Brandon asked about footprint charts using a range versus using a time-based range. For me, for footprint charts, I look at the volume and volume delta by the tick on a 5-point range. I will expand that to more like 7 points when volatility is high. Like, I haven't adjusted mine right now, but typically when the market is in wide ranges and volatile like this on ES, I will expand that wider to like 7 points. But the reason is because it filters out a lot of noise. Like, I don't want to see new bars opening based on a time interval. That means absolutely nothing. When I'm looking at the order flow, I'm looking at effort versus reward of price movement. So the delta of aggressive participants and how it is rewarded with price movement. That gives me a feel for the speed of the tape and who's in control. So when I'm seeing all the visual noise of new bars being opened in a time interval, that means jack shit to me. Right? I want to see effort and reward of price movement. And so I only want to see when there is reward of price movement of orders, not when time passes, right? So by using a fixed range on my footprint chart, then I'm filtering out time, the noise of time, right? I only want to see the effort of aggressive participants and the reward of price movement. That's it. Does that make sense? Did I explain that? Hopefully. Show you what I mean. So in an example here on Trade of 8 on one of my footprint charts, right? So I only want to see, I look at the cumulative delta down here as a visual by the bar, but I want to see effort versus reward, right? If there's high effort from aggressive buying and price is rewarded, it's moved higher. If we come to a high like this, where there's a high effort of aggressive buying right there, and it was not rewarded, and then a big aggressive seller stepped in like 200 lots, and quickly the tape moves lower with little volume, that's key information for me, right? So I want to see that visually by the delta, by the tick on point ranges where time is not a factor. And if time was a factor, then I'd have bigger bars opening and smaller bars opening and bigger. And, sometimes we'd open up multiple bars in the same exact spot just because time passed and the market stalled there, right? To me, that is just visual noise. That's not helpful. Right? So fundamentally, the answer to your question is I only care about seeing effort versus reward of aggressive participants in the market, and time means nothing. Time means something in terms of how fast the tape is moving in a short period of time, how fast orders are coming in, right? So time in terms of the speed of the tape is important, but not as far as how I'm looking at candle chart pattern formations of fixed time frames or footprint bars specifically. Definitely not a factor that at least not that I look at for my personal edge. That if you're trading more of like a specific price action strategy where you're trying to like pattern match price action over certain time intervals, great. That's not what I do. The problem with that to me is that stuff is real, right? You can have an edge doing that, But almost any edge that relies on like that kind of simple pattern matching is always going to have edge decay. The market will eventually identify that. It will adapt to it. It will change. The only, as far as trading goes, the only edge, I guess you could say, that doesn't really have edge decay to me, as far as discretionary trading goes, is when you simply just understand the market auction and how to read it. Right? So I have trade setups that I look for built around context, location, and confirmations on the order flow, but it's not like I'm trying to pattern match a specific candle chart pattern or price pattern that, you know, algorithms can identify and adapt to, right? It's just understanding the underlying market auction and how participants are reacting to it, right? So for me, a trade setup is repeatable, but each trade setup can be a little different, right? Because the market is very dynamic and very unique. I describe this as like being like a category of animal. Like if I'm defining a trade setup, it's like a category of an animal in science, right? You know what a dog is, right? Every individual dog is like an individual trade. They all look a little bit different, but you know what a dog is when you see a dog, right? It has certain characteristics, right? That's how repeatable trade setups are in order flow to me. And simple price action strategies do and can work, but to me, there's very limited times that they do in the long haul, and they will almost always experience edge decay at certain times, or just totally go away. How do you determine if a move is driven by aggressive buying or selling or by a lack of liquidity? There are so many bubbles. Do we move right now? Or that's the same thing. I'm confused by your question, Tiger, because that Tiger trades, that's the same thing. If there is so much aggressive buying or selling that there is not enough liquidity, being passive sellers, passive buyers, what does the market do? That means aggressive participants are in control and driving price in that direction, right? If there is so much aggressive participants to one side, there is not enough liquidity to hold that down. The market is imbalanced and seeking it. And if there is a lot of aggressive buying and there is not enough passive sellers to fill them all at every specific price, and aggressive buyers are willing to buy now, that's what aggressive buyers are. They're willing to pay higher and higher prices because, you know, the perceived value of just getting in is greater than the value of being limited by only getting filled at a specific tick price. Then there is high effort and high reward. So aggressive participants are in control of price's movement. And aggressive participants are always the one that move price, right? But the passive participants, liquidity, if you will, can put kind of like guardrails to that, because it can make it harder for price to move one direction or the other. But that would be a case of absorption. So if you come up to a level and we see high effort of aggressive buyers, for example, and low reward, meaning price is not continuing to move higher, then there is large liquidity there. There's large passive participants there absorbing that side. But if there is not enough liquidity, and this is what happens before like news moves, right? During news moves, you see the liquidity pretty much get pulled from the resting orders, get pulled, right? Nobody wants that risk exposure going into high impact news. And so that's why we have really fast volatile moves, because when aggressive participants slam the bid, slam the ask to get in now, price has to rapidly go to the next location where there's passive participants willing to fill them. Hopefully that makes sense. It makes sense in my head. I don't know if I'm communicating it well. So when we're seeing big bubbles like this, right, there are passive sellers there, right, absorbing them. However, there's not really anyone interested in aggressively selling after that. So price pulls back a little bit and then aggressive buying steps in. So we're seeing liquidity and absorption, but so far there has not been so much that it's able to stop the steady drip of aggressive buying, right? Can we use bubbles on Tradeovate? I'm not sure. I've never seen that. I don't have that. So there was some big buying that hit up here at like 58.60, which we see on Bookmap here, into these passive sellers up here. And now some more decent size aggressive selling is stepping in. There was a lot of large aggressive selling on Friday, right around here, right around this 55. I'll show you this, guys, because this is interesting. So on Friday, just before the close, there was a lot of aggressive selling here. Look at all these massive selling orders. By the way, these bubbles are filtered for 150 lots. So I won't even see a bubble unless it's at least a 150 lot order here. So you can see in this range here, there was a ton of large aggressive selling. Now it got absorbed in the near term, but it's just interesting. We had a massive amount of selling there. Now we came up to these highs. This is that big buying that we saw on Bookmap there, right at the high, that got absorbed, at least in the near term, got absorbed right there. And that was kind of the largest we've seen all day. Actually, looking at these bubbles, I think that's even larger than down here. So that was some of the largest buying we've seen all day, right into this gap fill, really, nearly this gap fill. So this is kind of interesting to me now. I'm kind of interested to see if we see another pop with weaker delta from buyers up here. Maybe interested in a potential short on this if this opening drive becomes exhausted and absorbed. Some aggressive buying stepping back in again. That's what's the confusion. That's not Tradeovate, that's Deep Chart. I see. That's the confusion. You guys are seeing this. I have Tradeovate, Deep Chart, Thinkorswim, Bookmap all open right now. This is, and you don't need all that, guys. By the way, you don't need all that. I'm just visualizing things differently for some different people and stuff. You don't need all that, right? I have lots of different tools. I have lots of different screens. I don't need all that to trade. I could trade on one or two screens. This is Deep Chart. That's the confusion I see. That's not Tradeovate. And I have this this large orders indicator on, showing me when large aggressive orders hit that are greater than 150 lot size. The greatest skill in this game, guys, is just patience and resilience and discipline. Obviously, you need a technical edge in the markets. You need a technical skill for sure. But lots of people have the skill that are not able, or lots of people have enough skill that they could be profitable, but are not. Very important on a Monday. Right now, I'm just waiting for something. You know, I'm still watching this top reversal scenario that I talked about in the pre-market. However, I'm also cautiously understanding that this news around uranium enrichment pause from Iran possibly fundamentally shifts some of the underlying heaviness theme that I was watching for. So I'm cautious here going, if we just had a technical pop into this area, right, and there was no fundamental shift, we just had a technical pop into this area, then we saw large absorption and aggressive selling hitting it, totally different scenario, right? Totally different scenario. But I'm a little more cautious up here since there's been a little bit of a fundamental theme shift. So my scenarios was watching this gap fill area for a possible short. I'm still not totally against that, but I need really good confirmations and a really good opportunity. So I'd want to see large absorption occurring up here multiple times. I'd want to see real aggressive size selling stepping in and really showing me that there's confirmations and that the reversal is really starting. I'm not trying to be the first one trying to fight this thing with my couple contract scalp. Yeah, it is. But again, I don't look at just one large instance of absorption and being like, this is it. So, caveat, if the market is in a balance range and we have very clearly defined support and resistance, top and bottom, and I'm a lot quicker on the trigger to spot absorption and fade it. But when the market is making a large imbalance move, I'm a lot more hesitant to see like one order sign of absorption and immediately fade a large imbalance move that's occurring. There's a big context difference there. So we did pop back up here again, a little bit weaker buying this time. So we now have a double top up here with some weaker delta on the second pop under this 60 area. So still developing here a bit, but a couple instances of some absorption going on here and potential exhaustion going on here. We'll see. Yeah, you want to have definite understanding of context and location going into a trade setup. The confirmations and things that I look to do fading a balance range is very different than finding a top reversal against a imbalanced price move. Like it can be similar, but in general, I'm going to be a lot more hesitant to just step in front of the train to go against momentum if we're in an imbalanced move versus if the market is just balanced overall, there's clear support and resistance and fake outs are highly likely, then I'm going to be quicker on the trigger to step on the tracks when I see the train stop. Near-term targets, I have this anchored VWAP level down here. So Gavin asked if I did take a short, what I'd be targeting. There's a low volume node pretty clearly defined right around 6840, and that also aligns pretty much identically with this VWAP spot here. So that's a point to watch. It also aligns with the breakout of this prior high here at 930. So that's an important spot to watch right there, either for a target or just context, whatever. That's an important spot. There was some large buying there. There's a low volume node there on the volume profile. There's anchored VWAP there. That was kind of a prior high at 930 that we broke out of with large buying on this. So this is an important spot to watch right here. Matter of fact, let me get rid of this ellipse. I want to put that as a box here. Kind of like this whole area here. That's kind of an important spot right there, either as a potential target or something. Context. We'll watch that. Gusta Trades said, I have seen you move your stop loss break even relatively fast. Generally speaking, you know, a lot of my trades are very, very precise. And once I'm in, the risk is very tight. And once a move starts, I'm usually looking to be right pretty quick on a lot of, it depends on the trade setup. It depends on the market conditions. But as a general rule of thumb, once I'm up more than like 5 to 7 points on ES, and structure has already shifted in my direction with the aggressive participants, then I look for my stop to get moved. Now it depends on the conditions and it depends on what's been happening. If we have, you know, I adjust that slightly, but just as a general rule of thumb, once I'm positioning a move really before it occurs because of what I'm seeing on the order flow, and then structure shifts substantially in my favor, I'm up like more than like 5 to 7 points. Usually my risk is going break even. With the thought in mind, like if I do get swept out break even, there are many times where I quickly reconfirm and re-enter the trade at a better entry. So this thing's kind of dead here. It's kind of dead. Lewis, no, Chart Fanatics is not partnered with them. It really depends on your specific needs. I can't make a general recommendation, but if you send me a message on Instagram, I'll talk to you specifically about what you're trying to do and maybe give you a recommendation. So aggressive selling still coming in here, but it's kind of lackluster volume here. Gusta Trades, congratulations. You've won the Apex Funding Challenge. Congratulations. Thanks for your participation and asking good questions in the chat. Building a bit of a mountain of volume here. Let's take a look at my volume profile that's developed here. So first of all, looking at this, where was that big volume transacted on Friday? Right there. We had this big gap down. Market didn't like it. Like a magnet, it went right back to where all that volume was built Friday. We see the wavier volume profile showing us a directionally trending move, right? Where we are rallying, basing, rallying, basing, rallying, basing a little bit, rallying more, basing, okay? Wavy volume profiles tend to align with trending moves. So now we're consolidating once again in the same area where we built all this volume on Friday. No coincidence there, right at the close, and we gap filled. Right, and now this to me looks like the largest kind of peak of volume so far here today. So what I'm watching for here is if this momentum shifts and pops fail and show exhaustion, and I see, you know, large sellers stepping in. Wait, am I missing it? Hang on. Right, so that is starting to occur. See 3 lower highs here with some weaker delta from buying and larger aggressive selling stepping in. So it's starting to occur here. But again, I'm a little not risk averse, but just needing good high high probability confirmations for me to go against this move. And I'll drop this screenshot in the chat if you guys want that, and then I'll show you something else that I'm looking at here. Again, if you guys want to review any of the screenshots and stuff that I'm talking about, it's in the Madoin channel on Chart Fanatics Discord. If you're not in there, make sure you get in there. It's a great free resource. No reason not to, really. So looking at my deep charts thing to kind of filter out some noise. So you can see same wavier volume profile here, directional move, bigger peak of volume here, obviously. Let's mark that really specifically. Bigger peak of volume right there specifically. Do you see that? These high volume area specifically right there. So the only thing is, you know, we're kind of seeing kind of a dwindling amount of selling coming in. I'm not seeing any, like, look at the small sell bubbles. I'm not seeing, we did see this larger absorption up here. That was a thing, but I didn't see any kind of like large convincing selling that's telling me like big boys want to sell this thing. I don't know. It may just kind of build and build and build and then just drop. I don't know. But I'm just watching it. And maybe they're breaking up orders to kind of like sell, kind of without drawing too much attention. That's a real potential. Congratulations, Slayer 18777, on your winning of the Alpha Capital Group Challenge. Make sure you check out the Chart Fanatics Discord. Go to the support channel on there, like the team said, to go ahead and claim that on there. Since this surge at 9:50 into the 10 a.m. news, it's kind of been a little bit of a grind. Point of control just shifted up here where all this volume is, right around these 49s. Yeah, Gavin, I would agree with that observation, saying it's a pretty fair auction, even though it is kind of grinding lower here a bit. Yeah, there's not like a substantial imbalance that I identified. That's like a go short now, right? It's this, you know, maybe bigger players are kind of breaking up orders, positioning in if they are selling this thing here. I don't know, but it's just a kind of a slow, steady grind here a little bit, kind of, you know, nothing substantially like catching my eye right now. And part of it is those big orders at the highs there kind of skewed all my delta bubbles here on Bookmap. But also I'm looking at my deep chart thing and I just don't see really any kind of big selling that shows me high intention right now. How do you use the point of control in your trading? Just a reference point, really. It's in balanced ranges. It shows obviously the peak of volume. It can be like a magnet towards price. So it can be used as a target or something like that. If price has recently made an imbalance move out of something, it can be like a support or resistance level, right? So if we break out of a balance area and then form like a low volume node, and then we kind of pull back to that low volume node at or above like or below that point of control, then it may become a key area of like support and resistance to watch out for. Gavin said, do you use zero prints as targets a lot like Carmine? It can, right? To me, there's I don't get too attached to the whole zero print thing. To me, I do look at them. It is high probability. Carmine's really good at using them. To me, it just usually often coincides with low volume nodes or like intraday low volume nodes. It's just an area where market participants are really aggressive, price move through it quickly, and we often retrace into those. Now, it may just act like a magnet that we retrace into, or it may become, if that imbalance that occurred there is continuing, it may just fill in some volume and then retrace. So I do look at it, but it's mostly just kind of paired with the same thing I'm already doing, like around low volume nodes. And sometimes I use those retracements into a low volume area as a target. Right. So yeah, it kind of just goes hand in hand with an area where buyers or sellers are really aggressive. There's a low volume node there, either on the full volume profile or intraday. And it's an interesting point either to use as a target because the market could reverse there, or a potential entry there, depending on the context and overall. Yeah, see, this is when the market's kind of, it's like Gavin said, when the market is kind of auctioning relatively, even though we're moving down, but it's relatively balanced as we kind of grind. That's when we get those kind of grinding channel type moves. I'm really hesitant in that because at any moment, like something like this could happen where we get this spike, so it's not, there's not really any kind of there's not really any real major imbalance occurring right there that's going to make me want to entry trigger, because at any point, like this balanced auction could shift 1% the other direction and spike right like that. Actually, speaking of what I was just talking about, like in an imbalance move or reversal, a point of control can become like a support or resistance area. It did just there. So the point of control was down here, hit it, bounced, and then a bunch of volume came in, and now the point of control shifted up here. But I don't have like a specific strategy that I'm looking for with that. It's just a piece of context. We got a fairly balanced in short term, near term, like we talked about, we've got a balance area forming up here inside that same high volume balance area from Friday there. So same. So do we now, and remember what I talked about, right? Point of control type thing after a break of a balance being a support or resistance area. That's kind of what I'm watching here. Does this now become a resistance area where we're once again balancing here, right? So I'm just cautious of being too early to it. I want to see real proof, right? Do we really reject off there, or do we now recapture above there and fundamental theme shifts, right? The ceasefire agreement with Iran is back on, type beat. We squeeze above there, we go back into the highs. That's possible. But anytime I see like a relatively balanced kind of grind, and that often manifests itself as like a grinding channel, I'm pumping the brakes away from that because I don't like that. And it just doesn't work well for me for how I trade personally. On a footprint chart, it's kind of wide here because, right, there's high volatility. Sometimes when the volatility is lower, this will look like individual footprint bars just kind of grinding in a channel, but we do have a decent bit of volatility. But we see kind of a relatively neutral auction here, but maybe 1% to the sell side as we kind of grinded lower here. And we have this large balance range here on the VP. You can see that near-term balance, and we kind of grinded our way lower in the channel. So I'm really hesitant, unless the one thing that I would look to do as like intraday scalps is when I see a channel like this, is I kind of look at the highs and lows that would form on it and just look for short-term like fake outs of it and just quick scalps targeting the opposing, thing here, right? If we're moving lower, see that low, fake out of it, pop. I'm not looking to do that right now. But that's something you can do as you back test it yourself, but that's something you can do. Or more often than not, I sit out of choppy, grindy channels, especially looking for continuation, because look at this. Anybody that was like, this is it, we're breaking down under this low, nope, stop hunt. This is it, we're breaking down, nope, stop hunt, right? So you just want to, for me personally, I like to pump the brakes in these kind of channels that form because there's not really any major imbalance, that tells me there's a good setup right now. Make sense, guys? Samiro said they won the trade. Team, can you guys look at that on the back end? It may be they still got to get to it, or we still got to get to it. So, still seeing potentially absorption in this range up here, but again, the current market context is making it a little tricky here. It feels like we're just teetering on the edge of waiting for the next headline to come out. There's more big buying orders that hit right here around this 50 right here. We see it right here at the low of this box that I just drew. So near term, these are the key areas that I'm watching. Down here, aggressive buying, low volume node, VWAP in this green box, and this green box up here, absorption occurring. So the last area, we see major aggression from buyers down here with price reward movement. Up here, area of absorption occurring. That also aligns with the high volume and point of control from Friday. So still chilling for me, guys. Samiro81, it looks like there may have been a response. So I would check that out. Yeah, so potential absorption going on up here in this green box that I do like. But we'll see what happens. I think what's keeping me out of it is just kind of the choppy grindiness of it here. Just feels like low quality conditions. I'll just put that. Just a gut feel of low quality conditions here for me. Like, these are those bigger absorption orders. So this is interesting, guys. You can clearly see these bigger green bubbles here that really stood out. And hang on one sec. You know, I'll just give you guys multiple ways of seeing this if you're depending on like what type of tool you're looking at. You can see how that stood out on Bookmap just visually there. And I could set a large trades indicator or something like that on Bookmap. But again, if you're using something like Deep Chart here, you can see where that triggered my 150 lot filter for those two big orders, right? Those were same thing here. And that was kind of in the same range that we've been watching here. This same range. Same range here. Tiger Trades Fanatic asked a good question. How did you train trading with Bookmap, and how do you backtest? Whether it's Bookmap or whatever order flow tool you prefer, to me, one, backtesting is a little different because it's not like backtesting in the traditional sense of people look at like historic price action, trying to develop like a quantifiable like edge on a specific pattern. There are things like that. So reading the order flow is something that you really got to get experience with live, and just learning to identify and read effort versus reward in the speed of the tape, right? But one thing that you can do, regardless of what tool you use, is use like replay features of the order flow data. Go back and look at key moves, right? Look at price action, look at key moves, key reversals, and things like that occurred, and replay it. Bookmap does have a fantastic replay feature. I'm sure other tools do as well. But go back and replay so you can get a feel for the effort versus reward that occurred at those reversals. What was the location and importance? Was it a low volume node, high volume node, etc.? But get familiar with looking at absorption versus aggressive participants driving continuation. It's best if you can do that over time live, right? But the next best thing is going back and replaying it, just like a sports team replaying tape, right? Going back and reviewing, okay, what, obviously there's nothing that replicates the live experience, but the closest thing often is going back and replaying tape, and thinking about, okay, not to armchair quarterback it, like what could I, but learn, okay, these are the signatures that occurred frequently when big participants got involved and initiated, major reversals or major shifts. So you can get more out of your time faster by, kind of ignoring all the lull and going straight to, all right, what are the key things that frequently occur around, big reversals or big breakouts, things like that, where there's clearly balance shifting to imbalance, right? So anytime the market makes those shifts, that's often where opportunities lie. If the market is in balance range and mean reverting, or it's shifting, the market's always shifting on short time frames intraday and higher time frames, all balanced, imbalance, balanced, imbalance, right? And so there's significant edge in identifying those things, or when they're likely probably going to occur next. And if you go back and replay the signatures, the signatures of bigger participants that drove that to occur, that is the most valuable use of your time. As far as getting, there's nothing that's going to replace just getting the live experience yourself. I just want to be clear. But if you want to get even more out of your time faster, a way to do that is to replay specific key times when big reversals happen, big breakouts happen, things like that. Yeah, lots of big buying up here at these highs again. But again, we're uptrending. So another big buy order just hit up here again at 68.59. So a lot of effort going on up here, which could result in a big reversal. But right now, I want to be a little bit patient. There's a lot of big effort from buyers up here. If it continues to go unrewarded, it could result in a big reversal. A beast, I kind of covered that already, but generally I look for, it depends on the trade setup, but generally I look for market structure to shift in my favor, being up 2R or more like 5 to 7 points or more, then I generally trail to break even on my risk. And if I get swept out, I either just take that, sometimes that happens, or I quickly look to reconfirm the trade and get back in. Some aggressive selling stepping back in here now again. Some larger aggressive stepping back in here on these 55s, 56s, 57s. Congratulations, Scuba Seth. You've won the 6-month TradeZella subscription. Make sure you check out in the Discord to claim that. There is some steady aggressive selling coming in here, guys. Steady aggressive selling coming in here on these 50s. After another instance of absorption up there. I'm gonna try that. I'm trying this short here. I don't totally love it just yet, but it's starting to build. I'm in here at 56. Smaller size, and I have a stop just up over like 59. Looking for this thing to drop back down under 50s, under the 20 EMA. There's a lot of aggressive selling stacking up here. There's been absorption going on for a while up here. It's not super A+ here just yet, but there's a lot of aggressive selling kind of stacking in here. It could get trapped and squeeze me out though, if these aggressive buyers keep driving price higher now. I don't like how this bid is coming in here. Would like to see this box break down here below these 55s pretty aggressively, pretty fast now. Just looking for us to drop back towards this anchored VWAP here, under 50s into these 40s. I don't like how we start trying to drop though, and these bids keep coming in here around these 53s, 54s. I really want these aggressive sellers to come in and saturate through that, crush through that pretty quick here. You can see it here, how that bid came in there, popped up again here. I don't really like that. That's kind of a red flag. Really want to see kind of aggressive selling really kind of crush through that pretty quickly. I was looking for a little bit more aggression to kind of trap this last larger absorption instance up here, but not really occurring. Yeah, after multiple instances of this larger absorption, I was looking for these aggressive participants to really start the move here, and they kind of haven't yet, actually. we've seen like 1, 2, 3, 4 instances of larger absorption here, right? So the risk is very small, reward is pretty high. But I don't like how that aggression came in and then quickly faded and bids stepped in. So it is what it is. We'll see. Basically was looking to go from this green box to target this green box down here. But kind of feels like watching paint dry now. All right, I'm out. Took me. I didn't adjust it. I just held it. So took a paper cut there. 3 point. That's fine. Was looking for kind of this aggression to come in after, 1, 2, 3, 4 instances of larger absorption here. It still might. It's just it is kind of grinding around here, hanging out, not super interested in it anymore. That's okay. Yeah, I think that to me there was smaller buying that occurred there, but still just not it's not looking great. It's just kind of consolidating here. I liked basically double top overall here with some larger absorption at this gap fill area. And it still might develop here, but I liked how right here we see this was some larger aggressive selling starting to come in, right? So I was looking for this to really initiate the drop down after, multiple instances of absorption, then some aggression, right? Maybe I was just a bit too early and it's going to come up into these highs one more time here. That's possible, or it's possible it's just going to kind of keep squeezing higher now. But if we keep squeezing at these highs and just keep kind of grinding our way higher here, I'm not going to like step in front of it to try to reverse it. I'm also not loving the overall location here of trying to keep longing it either. So yeah, we're squeezing out again. So I don't really have anything here that I'm going to look to trade personally after that, right? Like I said, when I got into it, it wasn't totally A+, because it would have been better to see, instead of going with these aggressive participants looking for this to really break immediately, it would have been better to see that already happen and then pop and retest and get defended, right? But sometimes if you wait for that, it doesn't happen, and then we just drop all the way down into the target, right? Seems like the market just wants another news headline before it makes another move, though. So, all right, guys, that's probably going to be a wrap for me for my trading day. I'm not gonna fight this thing. It's not ideal conditions. It's just kind of grindy here. Was looking for one kind of last chance for some good volatility to step in, pull this thing back after this large absorption, after some aggressive selling stepped in, but doesn't appear to be ready for that. All right, guys, thanks for tuning in today. I hope you guys got some value. I hope you learned something, right? We went through a lot of different things as far as order flow and just trading overall. So hopefully you guys got some good value here regardless. I will see you guys back here next week. Thanks for tuning in. Appreciate you all. And make sure you check out the brand new episode there on that the team just posted there with Zamco. All right, I'll see you guys next week. Peace.